Well, thanks for staying with us as we walk into trade this morning. What are markets worried about? Well, markets are worried about the tariff. The tariff man is back. And it's not China. It is not Brazil. This time, it's France. France is part of the NATO. And what we understand is that US President was in London. He met the French Prime Minister yesterday. And on the sidelines, the indications are that there could be tariff coming on French wine, French bags, French cheese, French merchandise, and that is in retaliation to the fact that the French have imposed what could be called as a turnover tax on some of the IT companies retrospectively. That is something which is really fueling some degree of uncertainty in the market. But back home in India, things weren't looking all that great. 2 days on the trot now, we've seen some degree of selling, a lot of unwinding, and a lot of profit booking. Sameer, the Santas come early this year, but what is the setup looking like for the rest of the month?
Morning, Nikunj. I think the data points that have emerged off late, perhaps that is what is giving investors a bit of concern as to, is the price movement being matched by the underlying reality? Now, of course, there are some green shoots, but those green shoots need to be further endorsed by follow-up because, we had our October month of decent, sales, but then November in auto, but the Motown just didn't react again to the November numbers. So I think that is something that people will be worried. Obviously, sector specific, there are issues. There is a emission norm shift, etc. happening. There is a calendar year shift for vehicles. But having said that, the overall manufacturing data that has come out in terms of the growth number that you see there, actually that is what is clearly concerning because that A will take time to mend, and B, the amount of rate cut and excess liquidity that you've seen in the system, plus the outreach that the government has been doing in terms of extending credit to MSME, etc., through their PSB outreach program. I think all that will probably take more time to show up in growth numbers. So till that time, you are likely to see on the immediate term more amount of downward revisions to the already lowered earnings estimates for both FY20 and perhaps FY21. So what is actually disturbing is that even as we roll forward to 21, there is not much of optimism to suggest in terms of actual earnings estimates, either maintenance or upgrade. So I think that is clearly what is concerning.
Okay, so that's where the concern's coming in. I just want to focus on some stocks where we actually seen some, good volume activity yesterday. Kunal, from a Bata to a Prestige Estates, a Whirlpool, a mixed bag, but we definitely saw a lot of action on some of these names.
Yeah, I think some of these stocks, Bata India particularly, I think it came out of mean reversion process. I think the stock was corrected 10% from 1810 to almost 1610 in the last 1 month. So it was a sort of a sign where the risk comes back into many of these stocks, or some sort of a rally picks up into these names. Now, what it also indicates is that these stocks were not going through a big correction phase. Earlier the concern was that if the if the market finds up many of the other large cap names try and support, then these stocks could probably go through a severe correction. But the fact that these stocks are finding time to consolidate and then seeing revival, I think just about indicates that there is more juice left into these stocks even from current levels. So also the fact that these stocks are more low beta in nature gives it more time for traders to try and position themselves accordingly. Prestige Estates is a separate case. It's a non-FNO stock, but I think it's a more high beta. And I was discussing yesterday as well that how these stocks managed to rise up in a matter of 3-4 trading sessions, but then they cool off also in a very similar fashion. So I think buying these stocks on momentum could not be a good strategy, but buying on dips could be a better strategy.
There's a tactical report. It's a tactical research idea. Morgan rarely comes with it. They've come with a headline called Tactical Research Idea. We believe the share fall in State Bank of India will be less, and there is time to revisit State Bank of India purely based on the valuations. Sameer?
Well, Nikunj, I think firstly, as you said, it's a tactical name, so maybe they are trying to forecast near-term price movements. But having said that, there is enough news flow both to justify the fact that GST revenues have picked up and crossed the 1 lakh crore mark for the first time in a lot of in a recent past. So that means that is definitely some sort of a boost. And SBI per se, the ownership is not as high as perhaps the private financial, which has been the trade for pretty much the whole of last couple of years. So I think SBI, as the IBC process starts happening, more amount of cases are settled, the credit growth in the system picks up. I think SBI will start showing more and more confidence. Plus, obviously, there's a liquidity event in terms of them, getting a stake sale of their cards business. So I think those are things that are important. From a valuation basis, it's a good franchise. And I think from a 2 to 3 year perspective, if one were to take a call on which way the Indian banking system is likely to go, our sense is I think PSU and perhaps SBI being the torchbearer would probably be the preferred bet amongst all the others.
Okay, that's the word on banks, talking about which you've got a big listing lined up today. I'm saying big because just the way the subscription figures was, seems like this one has got a fair amount of excitement around it. It's kept the grey market as well pretty alive and active. Varun joins in to tell us what to really expect from Christian Syrian Bank listing today. Varun?
Good morning, Aisha. Talking about franchises, now Catholic Syrian Bank seems to be a pretty positive one as far as the subscription was concerned that you can see from the issue. On a blended basis, it was around 87 times, but if you look at each individual portion, whether it be the QIB, retail or non-institutional investors, they all saw considerable oversubscription. There's a couple reasons for this. The first being it's a small IPO of around 410 crores, so it would be highly surprising if it wasn't oversubscribed too. That being said, it has an excellent loan book. It's comprised mainly of gold, 33% there, with really low NPAs. Now, the most recent trigger, a recent acquisition, Fairfax entered this bank around 6 months to a year ago. So the parentage now is also really solid over here. Now, if you look at the grey market premium, you were looking at around 60 rupees or a 33% upside. So the IPO was supposed to list at 193 to somewhere around 200 rupees. You're looking at a possible listing today at 260 rupees. So the market cap, which was also of around 3,500 crores, could now see a significant bump up to around 4,000 crores. Now, if you look at the reason why all these banks are IPOing, if you're wondering why such a small bank, why now, it's primarily around regulation. There was a case with Ujjivan as well. It's the RBI's regulatory norms that are forcing all these banks to list. Catholic Syrian Bank for sure does not need money right now. On the capital adequacy front, it's really secure. So keeping that in mind, we'll now be going over to the management, CV Rajendra, who's going to talk about the utilization of funds and what exactly this 400 crores will go toward.
Primary objective of the issue is only to get the shares listed. We have enough capital. We have 23% capital adequacy ratio today. And this issue is not to raise additional capital, even though it results in another 25 crores of capital being raised as a part of the 400 crores raised today. The issue is mainly from the offer for sale from the existing investors who are exiting in this issue. Asset quality has improved over a period. The new slippages are very low, as you must be seeing. So this is not only because of the recovery and provision, but also because of the process changes which are brought 2 years back. We are engaged with the CRISIL, and CRISIL has rewritten our entire policy, loan policy as well as processes, and also introduced a new rating system for the loans. And we have segregated the loan sourcing from the underwriting, and administration as well as the monitoring is segregated. So there is no vested interest of any one of the groups. The total overall book has improved a lot, and during the last 3 years sanction slippages are very low. Not only that, we have improved our provision coverage ratio also from 64 to 80%. We have gone for an accelerated provisioning policy. We provide much more than what RBI wants us to do. So today you look at the book, as we are a Canadian subsidiary, we are IFRS compliant. So entire Indian banking system has not moved into Ind AS, but we already moved into IFRS. So when Ind AS is introduced, the impact on our balance sheet will be much less, or maybe positive also.
All right. You can go on a Twitter handle and answer this very interesting trivia question. Since we are nearing the end of a decade now, what we would be doing, perhaps for the next couple of days is to test your market knowledge. Guess which is the best performing banking stock in last 10 years. A, City Union Bank, that's CUB. B, IndusInd Bank. C, Kotak Bank. D, HDFC Bank. You can go on a Twitter page and participate on this live poll. Which is the best performing banking stock in last 10 years?
A. City Union.
Why?
Returns.
But why do you think it is better than HDFC Bank, or have you looked at numbers of IndusInd Bank, or are you just guessing it?
Right now it is intuitive.
It is intuitive. That's what I'm saying. Intuitions can sometimes be wrong.
Sometimes your gut call can also be right.
Absolutely.
10 years is a long time.
I agree.
Okay, A from Sameer. Kunal?
I think it's A.
I already know the answer, so I put that poll out. So don't
Since
come
you
to
guys
me
know the
for it.
answer, next time I'm not coming to you. I shall keep it secret. When I looked at the data, I didn't guess what was right, what was wrong. Let me be very honest.
No, but if our viewers did watch the show yesterday, they would know the answer. That's the hint.
A, B, C, D. Keep guessing. We'll reveal the answer on a Twitter handle at 11 o'clock. But it's interesting the kind of wealth some of the companies have actually created in last 10 years. You know, the boom and the bust in the infrastructure cycle, and then the real boom in the private banking space. I think it is phenomenal what Indian economy and what Indian stock market, select few, have managed to deliver in last 10 years. Kunal, I want to go back to Vodafone. 3.5 rupee stock becomes 8.5 rupee stock, 8.5 rupee stock has become 7. Where will it settle? Will it settle at 7? Will it settle at 5?
I think it should come back at 5, but I don't expect that this stock would come back to those 2.5 or 3 levels. I think the volume texture has changed for Idea, even though it's a very high beta stock, low denomination, so it's more trader friendly. Into the volumes and the open interest, but just about the pattern of the prices, the behavior of the stock, and that the last few days as well, when the stock was at 7.5, it corrected, came back to 5.25 levels. It was the 50-day moving average that acted as a support. Now that average is closer to 5.2, 5.3 yet again. So I believe that there could be a chance that you might see the stock going through a mean reversion, but it may not be a stock which can come back to those 2.5, 3 levels. So for traders who are sort of waiting to buy the stock, assumingly on the F&O side, then I believe you should probably raise your level of buying to earlier 3.5 levels to now 5.5 levels.
On the subject of Catholic Syrian Bank, I finally got that right. Sameer, we all know, like Varun as well was highlighting, that it's going to open at a 30% pop. History's told us for these sought after IPOs that irrespective of that big pop on the first day, they continue to rise up. Is CSB going to be one amongst those? And then, should you even buy that pop?
Well, Aisha, I think the way it works is, as far as CSB is concerned, gold loans is a large portion of the book. Now, that is almost 1/3 of the lending book. Now, that is where, if you ask me, that is something that if you can get the call right on, that will the growth going forward be on this axis or not? Because typically the bank has shown that they are good as far as the liability franchise is concerned, which is basically what a bank is all about. Second, as regards them being able to lock in assets at decent yields and maintaining assets at and maintaining credit costs under check. On both these counts, the available history has given a lot of confidence. But I think from here onwards, buying it for a pop apart, if this business sustains, and which is where you may not keep growing at 25-30%, but if you do the dull, boring banking of 10-15% of loan book accretion without having too much of disruption on the credit costs, keep your costs, funding costs good, I think this franchise at the price at which you buy, that is important. But apart from that, I think as a going concern, one should hold such entities.
So not buy it afresh today after the pop?
Well, since it's an IPO, you are getting a chance to participate only today, right? Yeah. So I think if this is your price of entry, so it's for everybody, apart from the non-listed players. So I think from that point of view, if you buy it today, one should hold and see how the quarterly earnings deliver and how the growth trajectory is shaping up. So don't just buy it only for a 30% listing day pop.
Okay, Google's Sundar Pichai, he's taken over as the CEO of the parent firm, that's Alphabet, and that really is the most heartening news today after co-founder Larry Page steps down as CEO of the search giant's parent company. Now, Page and co-founder Sergey Brin will no longer be involved in the day-to-day operations of Alphabet, though they will keep their board seats. 47-year-old IIT graduate who has been leading Google for more than 4 years is taking over the company at a time when it is facing antitrust investigations and is marred by controversies over privacy and data practices. What a Rise with India moment this is, and a very proud one at that as well. On that note, let's take it across to Avan, find out what are the stocks which are going to be active today and what are the newsmakers this morning.
Okay, so let's find out all of the top 5 stocks to watch out for. Well, first up, Capri Group now has bought further into Lakshmi Vilas Bank, so watch out for this counter in today's trading session. Meantime, there's an acquisition in the logistics space. All Cargo is planning to acquire up to 50% in Gati. They're looking at an overall valuation of nearly 1,200 crore rupees. This is, of course, just news-based reports. Future Group is going to take private labels as well now to Big Bazaar. So they've got a whole host of expansion plans there lined up. Keep an eye out on this counter. Within the metal space, though, there is a little bit of trouble as Alco has moved the Supreme Court against Vedanta's unit. So watch out for both of these stocks in today's trading session. And finally, for JP Infra, some more details have emerged as NBCC has sweetened their bid for JP Infra. Those are your top 5 stocks. Let's take it straight to Trade Corner for some mid-cap calls. All right, let's get a move on and understand where our chartists are placing their bets when it comes to the mid-caps. Kunal, your call.
So it's a ban. NMDC, the stock did extremely well yesterday. First half, it was down 3.5–4%. And then we saw a very strong recovery. So both the volumes and the open interest moved in significant favor of the stock price. I think the open interest was up 17 or 18% plus for NMDC. So I believe that the stock could see a follow-through move on the upside. 116 is where I would place a target on NMDC. Recommend a buy with stop loss 105.
All right, getting a move on then. Manas, your mid-cap recommendation? Okay, Manas, just a bit of an audio glitch. We'll come right back to you. Let's take it across to Gaurav. Gaurav, what's catching your eye from the mid-caps?
I have a sell recommendation from the mid-cap space as well, and that's Apollo Tyres. The stock's in a medium-term downtrend. It attempted a short-term pullback recently, however faced resistance near its crucial daily moving averages. Over there, the stock formed a bearish inside bar and has broken out on the downside recently. In terms of wave structure, the stock has completed a 3-wave pullback, and what we can expect is an impulse on the downside, which means a significant correction is in the offing. Even the momentum indicators on various time frames are in line with the bearish expectation. So I have a sell on Apollo Tyres futures, stop loss 170 and target on the downside at 156.
Okay, let's take it across then to Manas and find out his recommendation. Manas?
Avan, I would like to go with the Bata because I feel the correction phase is over. The stock has already corrected 200 rupees from the top. Now the stock has made a bottom near to 1600 rupees. Yesterday we saw a breakout on the short-term charts. So I think now again the stock can come in the range of 1750 to 1800. So my target would be around 1760 here. Take a long position here. The stop loss should be around 1639.
Okay. All right, let's take a look at what else is making news this morning and what's fresh off the press in the Economic Times. Entities belonging to the Capri Group, led by Rajesh Sharma, have bought around 4.9% in Lakshmi Vilas Bank. With this, Capri has emerged as one of the largest non-promoter shareholders in the bank, along with Indiabulls, which owned just a touch below 5% of the bank's equity at the end of the September quarter. Serial pharma entrepreneur Arun Kumar, who sold his injectables business to Mylan for more than 10,000 crores 6 years ago, is readying to cash out of another venture. Kumar and co-founder K.R. Ravi Shankar have roped in JP Morgan to find a buyer for a controlling stake in Sequent. The promoters and their families hold about 56.5% in the listed entity. All Cargo Logistics plans to buy up to 50% in Gati, valuing it at 1,200 crores in a deal to be announced later this week. All Cargo will first buy just over 10% of the promoter's stake, followed by an open offer for 26%. And steel tycoon Lakshmi Mittal's ArcelorMittal has approached the government seeking immunity from likely future investigations pertaining to SR Steel and its erstwhile promoters, the Ruya family. Mittal wants to avoid a recurrence of any controversy akin to the one involving Bhushan Power and Steel when the ED attached the firm's assets after it was acquired by JSW Steel from the NCLT.
Now, a couple of stocks which are worth revisiting. One is Sameer, the overhang is over, but the stock overhang is not over.
Yeah, Nikunj, I think the thing is that you start getting these reports about directors mentioning about corporate governance lapses, then the management clarifies. I think all that is creating too much of news flow, which is then leading to abrupt price gyrations. But I think the underlying business, there is, of course, everybody knows that subscriber growth is there, but advertising growth is not as strong as one would have liked. But the business available at 29,000 crores, I think there is enough merit for one to take slightly a long-term view, that assuming that once we come out of this downturn and things come back to normal, how will this business shape up? I mean, you are getting almost one-third eyeball share of India market. So is that franchise valuable? I think the answer is yes. So people would tend to take a view that if all these things are put behind us, and now with Puneet Goenka being firmly established as the person to take the company ahead with the backing of the investors, if that is now a settled deal, I think beyond this people would be wanting to take a slightly longer term view as to how the franchise would shape up once the downturn is behind us.
Kunal, is the trade in yesterday's the carnage, which is metals, the JSPL, Tata Steel, they've down 4, 5, 10%. Is it time to buy, or they could be staring at more reversal?
So I think JSPL could, technically speaking, JSPL could be still a candidate to go long. I think the stock yesterday fell to 141 on the back of some news flow, and then it bounced back and settled off at I think 145 plus levels. So it just about indicates that JSPL still has a lot of support at that 140 mark. So if there is any sort of dip, I think JSPL could be a stronger candidate because the stock is still trading and floating above its 200 DMA as well. Now for the other names, I believe out of the other stocks, Hindalco, Tata Steel, I think both of them have had shown signs of promise. But the fact that these stocks are struggling to break even their 200-day moving averages, some crucial resistances on the price front, even with a strong price formation, I think just about indicates that these stocks would go through a more time-wise correction and then probably give a breakout on the upside. So I think JSW Steel, which we discussed earlier on the large cap front, and Jindal Steel on the mid cap side, I think they both look fairly attractive out of the middle pack.
Would you read into the move on Bajaj yesterday, or you feel it's just a minor kind of move that we're seeing?
Bajaj Auto?
Yeah.
Well, I think it's a very strong move for Bajaj Auto, and I think that's probably a case, I was discussing yesterday that how names like Maruti, Bajaj Auto, and I think Eicher Motor also to a larger extent, these stocks have not gone through a major correction in the last 1 month. The rally has been more than 30-40% for these stocks individually, and the correction has been more prolonged in terms of time, but less in terms of price damage. Now, when you see such a scenario where these stocks go through a big rally and then a time-wise correction, I think that's again instating a fact that these stocks are going through a big cyclical change of trend, and these stocks would go through a time-wise correction in between. Opportunity for these stocks is when you try and enter into these stocks in a time-wise correction, because then you have the moving averages moving up higher, the slope of the average is also moving in sync with the price trend. So Bajaj Auto, I think, is a very classic case in that sense. Maruti also has a very strong support at 6,900. So I think if both these stocks come back to some sort of their short-term support levels, it could be a case of a very good contra buy.
Since we are getting into this, this year-end factor for autos, I guess somewhere one important factor for autos could be that December may not be that bad, because year-end normally sales, they tend to pick up because you will see big discounts. When you buy a car or a two-wheeler or a vehicle, remember the reselling price is a function of the calendar year in which you've bought. So if you bought your vehicle in 2019 and in versus 2020, when you go and resell the vehicle, there will be a big difference just because the calendar year changes. So a lot of inventory could also get cleared in December this time around, because a lot of auto companies have now really retooled and tooled their assembly line to BS4. So that in a sense is going to be something which is going to be having impact on the way how auto sales would move. We've been talking about the best performing auto stocks, and if one really looks at the best performing auto stock, we always thought it's Maruti or Eicher, but in last 10 years, trust me, it's not Maruti or Eicher, it is TVS. Let's look at that. Yep, let's look at that. Last 10-year change of Maruti, and last 10-year change of TVS, and last 10-year change of Eicher. Those data points will just come up on your screen. There you go. 13x for TVS. 13x. Eicher is up more, so I take it back. I thought it was TVS, but Eicher is up 31x. Maruti during the same time, even though it has got this halo positioning with institutional investors, in last 10 years, Maruti has given a return which is close to about 3.5x, and Hero MotoCorp actually has been flat. Sameer, I never thought iShares would be up 30x. Okay, iShares is an exception, but TVS, the number 3 player, worst margins, it is giving you 10x returns. 10x.
I agree, Nikunj. I think iShare apart, everybody knows that if your yearly sales of 60,000 REs, Royal Enfield suddenly becomes your monthly sales. So obviously there's a 10 to 12x kind of a revenue impact. So one would assume that if the stock price performance and the profit performance would be a factor of that. But as you asked TVS, I think TVS, what changed was their entry into scooters. They actually captured the entire scooter segment, the growth fairly well, and they were the first guys. For example, their Jupiter product that was launched way back, and I think if I remember 2005-06, from there the entire, or probably I don't remember the year, I think it was probably early 2000s. There, the scooter, that product, that clearly set the whole mood of the company apart, and they were actually capturing a large part of the scooter market for a fairly long period of time. And to that extent, it was a virtual monopoly. So yes, people who have participated in the TVS story, they clearly were playing the scooter shift rather than the discretionary motorbike, or because Royal Enfield was actually a very high price bike, whereas the scooter segment, the Jupiter, was 40,000 rupees scooter, and that actually saw the numbers really come in fast clip for TVS, and which clearly reflected in the stock price as well. Because yes, there are concerns today that even today it is perhaps an auto major which is available at a single digit margin. So the margin story is still not played out. But I think the entire market capture of the scooter market growth is that is completely the TVS story.
I shot 30x for a stock.
Is that a question for tomorrow?
No. I'm generally just saying that. I'm just trying to say that when you look back and say that, okay, there is a slowdown in the country and, we've struggled and China is doing exceptionally better, how stock picking can make a difference. The halo positioning in the auto is occupied by Maruti. 40% market share, great company, nobody can touch it. 12 players in the passenger car market, they've been reduced to 5 or 6. Maruti is the lone ranger, so to speak, with 40% market share. But Maruti in last 10 years, and 10 years is a long time, right? We're coming off the financial crisis, the consumption boom was strong, saving was coming down, is up 4x. Right now, right? iShares is giving you 30x return. TVS Motor, which is the number 3 player, or number 4 actually, I would say.
And this is also when iShares has gone through its own churn of troubles.
Yeah. I mean,
it's not really that haloed name anymore.
If I talk from peak to peak, the number would be significantly higher. Even for Maruti, peak to peak number would be significantly higher. But a sector like auto, which is not like centered around startup or AI or big data, it is bikes. Royal Enfield, I think, is the oldest platform in India. RE. It is like somebody would argue that this is a bike which I used to see in my college days. That same bike has come back, and that stock is giving you 30x return. So you don't know which way demand, equation, big picture, how these things change. My limited point is that we can do comparisons with a lot of countries and say, okay, last 10 years have been a lost decade. But for an investor, the stocks which we are showing on a daily basis, that just tells you that how stock picking made a lot of difference.
Yeah,
it's actually also a function of the way customer preference and consumer demand shapes up. For example, in a market like India, you had at one end the scooter market doing well, which was sub 50,000, and at the same time you had a bike like a Royal Enfield, which is a 1.5 lakh rupees bike, also growing at almost 12x the volume. I mean, iShares used to sell about 60,000 vehicles per annum. Not too long back, about 8 years back, that was the yearly number, and today they do that in a month.
I'll give you another interesting trivia. It's not about India, it's about US. Which is one of the best performing shoe stock in the world. It's Nike. And the reason why Nike sales have come back is because suddenly the marathon culture is back globally.
Running, yeah.
When you look at A as a culture and B, you look at the after economy which is getting created, just because there are marathon as a culture in last 10 years has made camp. Mumbai Marathon, Delhi Marathon, you've got all kind of marathons now.
Absolutely.
So marathoners are back, and when they're running, they're betting better quality shoes. And which are the two brands which are there, Nike and Asus?
Okay. Let's move on then, and let's try and figure out what's going to be that stock which will give you those kind of returns in the next decade. Sameer, if you were to stick your neck out, 2020 to 2030, which is the stock that we're going to be talking about?
Aisha, I think first I'll probably need a very different class of vision, because one would need...
Things are changing that fast.
Absolutely. See, I think these are trends that one would need to pick up. Like, insurance is one, perhaps asset management companies, but then everything at a price. So Nikunj, when you mentioned TVS, 10 years back, if you look at, the company was available at probably 2 or 3 times EV EBITDA. So I think today, if I were to take that, because I don't know what trend will shape up, but if I look at Tata Motors for that matter, Tata Motors is today perhaps in that zone whereby it is a brand play, you are having a China leg also, and at the same time the valuations are not steep.
But TVS had no debt. Tata Motors has a lot of debt. So the difference 10 years ago, I'm saying 10 years ago, the operating debt for TVS was not very large. That's what I remember. It had come down to a market cap of about $1 billion. Akash Prakash once famously told me that when he bought into Ashok Leyland in 2014, the total value of Ashok Leyland market cap and the total scrappage value was actually equal. Which is that you take all the Ashok Leyland trucks, scrap them, the value which you will get versus the market cap. That was the value of Ashok Leyland. It had come down to 9 rupees in 2014. That 9 rupee stock went to 150, 160, wherever it did. But I don't think we are there yet. You find all this in bear market.
350% return from 2014 to 20.
But Aisha, you have to also remember that the 15, 16, that 49 rupee stock became 170, 180. And even at a depressed level, it is giving you 3x return.
That is when it is actually half from the top.
And I don't think any disruption is coming in the CV market. I mean, I've yet to hear the word electric. I'm yet to hear the word electric trucks.
Tesla's come out with a truck.
But it's not something which is mass.
It's not mass.
Anything Tesla does is a lab experiment. So
it's only for photo ops.
Exactly, it's a lab experiment.
You'd be surprised. But anyway, okay, let's move on. Let's talk about some of the other buzzers, and we have to revisit Yes Bank. Kunal, you also were pointing out the kind of fishy movement that you're seeing in Yes Bank. What next after the 10% fall yesterday?
So I think it still remains, the data is still quite, I would not say pessimistic, but very negative for Yes Bank stock price. The way the stock has seen writing of options, such kind of aggressive writing of options, 72 strikes, from 70 strike to almost 85. It just about indicates that traders are almost as of very certain that the stock may not cross that 70 mark. And for this expiry, which is almost the next 20-25 odd trading sessions more, I think the stock has a ceiling at those levels. So the stock just 2 days back tried to test that 70 mark. 69.8 is where it made an intraday high. 2 attempts it made towards that closing or crossing that psychological mark, but both these attempts failed. And then in the last 2 days, as well, we saw a consistent build-up of open interest. Now, in such a scenario, the outlook of the stock remains to be negative. It tested that 60 mark yesterday as well, which we discussed. I think now the stock should go through a gradual grind. Say by the end of expiry, I think there could be chance of the stock coming back to even 55 levels as well.
Okay. Yes Bank is one. India Bulls is the other one, where a lot of back and forth has happened in terms of the real opinion. Kotak Mahindra Bank is what I want to revisit once again, because suddenly Kotak Mahindra Bank, is it underperforming, Kunal? Kotak Mahindra Bank, it's underperforming, right?
It's underperforming, but it's come back to its...
you mentioned this yesterday, I think. Day before yesterday.
As a buy, yeah.
Where is Kotak Mahindra Bank headed? If you have to buy one bank, we would, for the month of December, which one will you buy?
I would still look at ICICI Bank as a buy. I think that stock, it was 519, 520, I think last Friday or Thursday, and then it cooled off to 500. But even yesterday in the last hour or so, there was a flurry of price action in it again. It came back to day's high, 510, 511 level. So I believe the stronger pattern of the strength still continues with ICICI Bank. Kotak Bank has been more of a low beta stock. It's a stock which behaves in a very seasonal kind of a fashion. 3 days, 4 days, it manages to rise 4-5%, and then it goes through a 1 month or a 2 month sideways consolidation. So until and unless you see a breakout coming into Kotak Bank, then the range shifts for the stock, and the range could be a 10% shift. But I think if that happens, when Kotak Bank moves up, you need support from all these other private sector banks as well, and which is why I believe that that slight beta nature or that slight high beta nature comes back into ICICI Bank. That could give you an added advantage. So still bullish on ICICI Bank, marginally better than Kotak Bank.
Sameer, does it make sense to buy ICICI Bank afresh even at these levels?
Well, Aisha, between ICICI, yes.
Say that again.
Aisha and Aisha. I think I would probably be more comfortable with an SBI, because SBI, you're likely to see, at least the government is talking of some sort of a relaxation on the GST slabs. You're looking at the liquidity event of the IPO, and the fact that in case there is even some news of the rate cut, etc., the transmission is at least thought of to be more seamless in a PSU bank rather than the private franchise. So I think I would probably be better off looking at an SBI even on a shorter term basis.
Okay.